This is the last week of the year, the last time we're going to do a trade plan for 2023. This is when the market slowed down. So guys, manage your risk. And we will have some more videos coming, a bit more educational, a bit more reflective, and those will be useful to your trading. But for now, we're going to pay attention to the fact that typically at this time of the year, holiday season markets slow down. Nevertheless, I've got our charts for this week. Here's our short list. I'm going to go through Euro, Dollar, Aussie CAD, Pound CAD, Aussie New Zealand, Gold, Oil, and S&P 500, US 500. Let's begin. As usual, 11th of December, we've got our Monday plan. And we're going to start with the calendar. Let's have a look at what's going on this week so we can take that into account. All right. So what do we got? Well, Monday, typically a quiet day, just the Aussie speech there. Tuesday, we've got claim and count change on the pound. We've got dollar CPI. Watch out for that one. That's been a volatile one this year. Wednesday, GDP on the pound, more dollar news, and a big one, FOMC and the funds rate. Big one for Wednesday. So major one to watch for. That will be a big day on Wednesday. Let's see if there's any volatility. Thursday, we've got the Swiss policy rate, monetary assessment there. Another big one. Pound, we also have another bank rate. Euro, we have a refinancing rate. So really big news this week on many currencies. And we've got another dollar news too. Euro press conference, and again PMI numbers here on Friday for Euro, Pound, and Dollar, and then ending the week with a speech on the CAD. Really a big news week, big one for the dollar, major one. We may see major movements, fluctuations on several pairs, because this is a huge news on the dollar. And as we know, dollar is at the moment, the world currency. And yeah, we've got Swiss, we've got pound, we've got euro. Quite a busy week. Let's see what we can make of that and see whether the technicals line up with any of that. All right, let's begin. As always, we're going to start with the dollar on the weekly. And for the past 2 weeks, we have been looking at cheaper prices on the dollars, on the dollar index. And we've looked to the dollar possibly heading higher. And that is what we are having at the moment. Still having this very slow, gradual retracement, or in the shorter time frame, the trend up, coming into this retracement area. And that is still what we're looking at. At the moment, we've turned temporarily bullish. We've got higher highs, higher lows, got structures broken to the left. So we are temporarily bullish, and then we'll see what happens when we get here. If we get higher prices and invalidate right here, or we break down and go lower. So very short term bullish on the dollar. Okay, we've got the euro now. So the euro will be the reverse, therefore short-term bearish, and then we will see what happens from there. We've got the inverse, as you can see here, the reverse of the dollar index. So we've got the invalidation at the low. And then the question is, are we going to hold this low and head higher, or are we going to break down and go lower? So here we are. What do we want to see? Well, we'd like to see a break of this high and a clean break and a close on the daily. So that will really give us confirmation, a sign that the dollar wants to go, the euro dollar wants to go higher. Once we have that, we'll have a level here develop. Let's just delete a few of these markings because they're now not necessary. Reach these levels. Let's get rid of all of that, just to avoid any confusion. Okay, so that's much cleaner, right? Right, that's good. So when we have a break of this high, we will then have a level and a possible pullback and continuation. Now, if the dollar is going to continue going higher, at least in the short term, then we'll expect the euro to go lower. Therefore, we've got this low here. And if we break that low, then we're going to look to do this. Then the next point of calls will be the low down here, quite obvious. And then we've got this low. So that's the idea with the current bullish or temporarily bullish dollar. We're going to look to the downside. However, the break of this high will signify a change, a turn in the market. So for now, we're at this retracement. So we had this impulsive move higher. We've retraced. And now the question is, what are we going to do from here? This is a low probability area to trade at because we have come deep into retracement. And now the question is, where does the market want to go from here? Where is it going to take its set? Is it going to go lower? At the moment, it doesn't look like it's turning. So we may be getting more downside. However, let's consider, you never know what the market's going to do, particularly with a really big news week this week. Funnily enough, at the last week we're trading in the month. Let's see how it goes. Yeah, this will be the some interesting levels to watch. Really have to wait, and again, just let the market do its thing first before deciding what to do. Okay, Aussie CAD, let's have a look on the weekly. Of course, you may remember this from last week, and what we wanted is to see a bit of bullishness. We did not have that. The market broke down. We are asking ourselves, where will it go? So we wanted to wait. We've got clear bullishness here, clear higher highs, higher lows. The market broke down further than expected. However, we did have this big bullish reversal candle here. Now, looking on the lower time frame, how do we approach this? Well, we've had a break that what we expected, what we waited for, I should say, and now we are developed this level. We have now come down into this level, and now the question is, are we going to get a reversal? So two ways to go about this. First question is, are we going to break through this 0.9 whole number, or are we going to go lower into the lower level, which is down here? Now, a few scenarios. Scenario number one is a break, is a reversal here where we are now. Right now, let's mark a low to the high. We can see that we have hit the 6218 retracement level. That's the first point. And we are at that right now, right at the beginning of the week. We are very, very early here on the Monday. And the question is, are we going to get that push higher? That's scenario number one. Not the favored one, but it is a scenario nevertheless. Scenario number two, which is more favorable because we're going to get a lower price if it happens, is this scenario. So a lower price, head lower into this level and then continue higher. So it's market is kind of like a spring. The more it compresses, the further down it goes, the more it tends to shoot upwards in the case of an uptrend. And we want that lower price to get that really good risk to reward, really good entry. And that would be the scenario. Now, option 3, still leave that. So we've got A, got B, and we also got C. So what is C? Well, C is a break higher. You can see if you look here, if you want to look at this trend line, we've also got this break right here. So now we've broken this level. The safer bet will be the break of this high, moving higher, coming back to get a better price, and then continuing on its way up. So that is scenario C. And if you're looking at this whole thing as a big range, then which right now is choppy and unclear, making lows and breaking highs, then well, of course the favored scenario would be option B. So wait to see if that's the case. If you're taking a risk, the riskier trade would be option A. So those are the scenarios for Aussie CAD. Okay, let's move on now to Pound CAD. Now, Pound CAD is quite similar, as you may guess. We've got this big pin bar on the monthly time frame. The market is heading higher, pushing higher. We've got clear bullish months on the weekly. We've got clear bullishness. We're now in a retracement phase. So now the question becomes, are we at the end of the retracement phase or not? Are we ready to jump onto this trend? So our targets would be the clear highs. We've got one high here and the obvious high over there. Those are our reference points as targets. Then we can draw a fib from the last obvious low to the high, and we haven't quite touched the 61.8 level. Let's look on the daily. Heading down, top down analysis, heading down the time frames, and what do we have here? I haven't quite touched the 61.8 level, so the question is, are we going to get that reversal? Of course, we have big news week. This may be something to wait for, maybe a catalyst for the week. And yeah, we're going to see the candles will tell us the story, particularly the daily ones as the daily candles close. So similar to the Aussie CAD, we've got a possible move lower, heading lower, and then some kind of reversal, and then continuing to the highs. Of course, that would be favorable. We have a bit of a level over here. So there's that level. We've also got an invalidation point. As a reference, and then heading higher. Now, of course, we have to take into account that there could be a possible alternative scenario. Therefore, we will say that the last high, which is this swing high that you can see, if the market breaks that, the alternative scenario will be, of course, a break, pulling back to get a bit of price, and then continuing higher. So that's the alternative. If we go down a time frame still, there you go. Here's the obvious swing high on the 4-hour. So once again, we shall wait for the news. Let's see how the volatility plays out. Much better to wait for it and then see what happens, because we may still have this kind of range continuing for longer. We don't know how long it's going to continue for. Okay, let's see how it develops, and then make a decision from there. A moment too early to tell, particularly when we are in a heavy news week and the direction is not yet clear. Okay, that's Pound CAD. Let's move on to Aussie New Zealand. And you may have been with me last week, and Aussie New Zealand is an interesting one because we looked at a reversal, which is possibly what we have had here. We've had this bullish move now, breaks of highs. We did not invalidate this low that we were looking at. And we're deep into a retracement phase if you mark this low and this high. Now that we are deep into that retracement, that's a really great cheap area to work from. And because of that, if we go down the time frame, we finished off last week looking at this, and here's that break, here's that momentum move, and now possibly we are going to come back. If we come back into this area, then this area would be of interest. Trade from. What do we have? Well, if we have the push higher, then this low becomes the invalidation point. When this will become the invalidation point when we have the market break higher. So far we have had our first clue here. If we break back through this high up here, Then this will become the invalidation. Until then, we still have this low. And you can see that perhaps we may have something like this head and shoulders pattern develop if we have this right shoulder down here. But that is an if. We'll see if that happens. At the moment, we can't really tell anything until we have a clear break of this high up here. So yeah, let's see. We've got an Aussie speech and some New Zealand news as well this week. Let's see where the Aussie New Zealand goes. Once again, the daily time frame will be your go-to. So whether we get a reversal here, another bullish day, let's see. But so far, the setup, the signs are looking good. And obviously, a very decent risk to reward trade here. It's about 100, 200 pips, and 200 pips on Aussie New Zealand is a lot. A lot, because Aussie New Zealand does not move very much on a daily basis. Let's move on now. Guys, if you like this video, comment down below, subscribe if you haven't already, and click on the bell icon if you want to receive this straight away as soon as they're posted. Of course, 3 times a week. And we're going to continue posting this during December as well. We've got a few more videos coming up to help you with your trading. Okay, one we haven't looked at for a while, it is gold. What have we got on gold? Quite an interesting one, because right now on gold, what we can see is we have an all record high since the beginning, since forever on this chart. All these highs been broken, a new high has been made. So where we go, we got a new record high. And what does that mean? Well, the indication is that the gold making a new high, that it may go higher. However, we know that at record highs, big highs, we typically have reversals. And we can look to reversals until we have the highs confirmed as breaking, which is a closure of a major candle, a major higher time frame. If we look at the weekly and drill down, you can see that we have not closed above the ultimate high. And in fact, we have had a bearish engulfing reversal candle. This is now no longer relevant. What does that mean? Well, that means that perhaps we have, at least in the short term, a reversal possible. If we have a reversal, if this indeed is a reversal and we are correct, then the next low target would be this low, and then the next low after that. And then we've got lower lows here. So these are the scenario if this is indeed a reversal. So for now we are having the clue that it is. We've got the reversal right on this high, and we may have lower prices. Let's drill down and see what's going on. What do we see on gold here? Well, we marked out this gap before. You can see that gap here. Typically, the market does like to fill gaps. We never know when it's going to fill. This was from way back 2 months ago, October. Now the question becomes, are we going to head lower and actually fill that gap, or at least come down into these levels? If we are bearish, what are we going to look for? Well, of course, we're going to look for a good price to enter. And what's a good price if we're bearish? Expensive, nice, expensive price. Looking at the current price section, we have break lower, lower, lower. The market is breaking lower, lower. And it seems that we are heading to the downside. Let's drill down into the 4-hour. And we can see these lower lows develop. And therefore, we are at a cheap price. What do we want? We want an expensive price. We have a level here that we can see that we have hit. We also have a level here. And we have a level here that the market has moved from. So how do we look at this? If we want a cheap, expensive price to sell from, well, if I draw a fib from the high to the low, this ultimate high we moved away from, and this low, then the expensive price will be up here somewhere beyond this level. So we have the halfway mark by here, we have the 61.8 level. So we really want to see a pullback to get a more expensive price and then head lower, if indeed this is the high. So therefore we've got several possible scenarios here to look at. Ideally we want to sell from here, from way up high. So that will be the favored scenario. We have also this level that has been respected, that the market has moved from. So we now no longer need that. We've got a bit of a smaller level over here. So there's the other possibility that we will have this scenario. So a breakdown and move lower. So again, let's just mark it out. We've got A and we've got B. This is less favorable, of course, because it is a lower time frame scenario and it's lower risk reward and it's not as an expensive price as A. And then of course we also have, I'm going to play out for scenario C. Scenario C will be break lower, break lower and continue to the downside. So if we have a break of lows again, then we look to scenario C. And if we have a break of this high, then we look for scenario A. This would be ideal. Again, the daily picture will tell us what it wants to do, what the market is going, more likely to go, I should say. And yeah, we will wait for that. We've got our scenarios planned out. We're kind of in a no man's land here. We do not quite know where we are going because we're either, maybe this is a swing where we have got a low and a high and now we are at a cheap price, or we have this swing, this reference point, and here is the high, here is the low, and this will be the expensive price. With the record high, we're going to have to wait and see. Really want to see a better price, and the better price is scenario A. So there's a few ways of going about it. You could say, well, if we go to A, if we do have scenario A, then I'll take a trade, and if I B or C happen, then I'm not interested. These are the questions you have to ask yourself in terms of managing risk, managing probabilities, and what is the best scenario, the best quality, high quality setup, high quality trade. Yeah, we'll have to see how the market develops. Again, the big new USD news will be the main driving factor. And my favored idea is to actually wait for that, because that may bring about some unpredictability, volatility. You never know, especially at this time of the year. It just can't really tell at the moment. So if you are trading, I would say this week, the lower time frame, the real quick trades or lower time frame trades are more favorable because of what we've got going on this week until we have things play out. Yeah, let's see. For now, my favorite scenario is option A, the bearishness into these lows, especially with the current bullish dollar, at least in the short time frame. Okay, let's go to oil now. Oil is one we've looked at for a while. And what do we see? Well, we've got clear bearishness on oil, reached our targets. from previous weeks, heading lower, lower. We've got this bearish week last week, continuing to head lower. The next target would be this low down here. Are we going to continue lower? Well, we shall see. Let's go into the daily. What do we want to see if we're going to sell? If we want to look to a sell, well, of course, a better price. So here's a high, here's a low, and here's that better price up here. And we've got a bit of a level over here. So we really want to see that better price in order to continue selling. So it would be something like, let's just draw it again, hitting the better price, moving lower, getting a retracement to get a retracement, a confirmation, a better price on the lower time frame, and then heading lower. So this entry right here, this pullback would be the favored price, and then we will have first target would be the low if this low holds, and then second target would be this 67 number, which is the low of this swing. Now, so to the lower time frame. At the moment, we've got very choppy, quite messy price action on oil here. I don't quite see what's going on, and the higher price would be the favored scenario. It doesn't mean to say that it will reach there this week or it will have a reversal this week. We may go higher very slowly. Again, remember, we've got the quieter holiday period, but at the same time, we also have big news here, especially on dollar, and oil is priced in dollars. Let's see if we even get here. For now, the price action is unclear. We can reassess as we go through the week as well. A bit of a level here too, isn't there? A bit of a level here as well. We'll reassess as we go through the week. If we break highs, we've got highs, possibly break over here. So if these structures break, then we will look at the market again as it goes along on Wednesday. Okay, that is the oil. That is oil. Let's move on now, finally, to, let's just draw that again, sorry. We need to draw our invalidation points. So we have our invalidation up here, or it will be up here if we get a reversal on this level. And then, this will be the idea. Okay, so finally, the US 500, S&P 500. Our levels for targets have not yet been hit. These are our levels. These are the highs. We've got higher highs. The market is very, very bullish every single week. Looking on the daily, we've got bullish days. We've got our levels to be hit. As you can see, we've got a possible swing low down here. We did not go lower. So let's remove these. Let's remove this. Let's remove this. Look on the lower time frame. And as you can see, we have headed higher. We have broken. And now we're heading to the next levels. What do we got? Well, here's our obvious zone, possible zone to look at. And we've got a zone here, bar invalidation, the last swing low that we moved away from last week on the NFP news. This high is now broken. Therefore, now what we'll look at is a better price and then continuing to the upside. Don't know how it's going to develop, but we'll see these swings. And if this area, if this does not, you don't catch this, or we don't head through this, then the next possible scenario would be the level, the next level up, which would be this kind of entry over here. Once we break higher, pull back and get another better price to continue to the ultimate high target, which is 4635. And this high up here, I should say, let's make it exact, 4634. And let's mark that price point. Yeah, there you go. You can see that there. Okay, so that is the continuation buy on the S&P, at least for now. If something develops here that's interesting on this idea before the news, we may want to take it, but again, riskier because of the really big economic calendar this week. Okay, that finishes up this week. Thank you very much for joining me, and that is the plan for this week. Manage your risk. Remember the news, watch for the news calendar each day, and trade according. All right, my name is Dima, and I'll see you in a couple of days, guys. Thanks very much for watching. Bye for now.